Hi everyone. While the market lost $6 trillion in 2 days trading during April's Liberation Day crash, SCHD dividend investors quietly collected their quarterly payments and watched institutional money flood into quality dividend stocks. Here's what blew my mind when I analyzed the recovery data. The S&P 500 crashed 20% in 32 trading sessions, but SCHD shareholders who stayed disciplined are now sitting on 30% plus gains as markets hit new all-time highs. Problem number one, you're still timing market crashes instead of building crash-proof wealth. Here's the thing most investors don't realize. If you're trying to predict the next crash like April's Liberation Day disaster, you're making the same mistake as 90% of retail investors who sold at the bottom. The market lost over $6.6 trillion in history's largest two-day loss, with the Dow shedding 4,000 points and the Nasdaq entering bear market territory. Quality dividend growers like SCHD have outperformed during both market crashes and the recovery that followed. Solutions for every level. At beginner, stop trying to time crashes. Build wealth with SCHD's 3.75% yield that paid through the entire April meltdown. For intermediates, position for crash resilience. SCHD's defensive sectors and dividend growth delivered stability during 20% market declines. And for advanced, use the institutional crash survival strategy that works through Liberation Day style panics and recoveries. Problem number two is that your portfolio has zero protection against tariff-induced market chaos. Here's what's crazy. Trump's Liberation Day tariffs pushed the average U.S. import tax from 2.5% to 27%, the highest level since 1930s. This has triggered a global market panic. The VIX fear gauge spiked to 45.3, its highest since COVID-19. While major banks raised recession odds to 60%, dividend sustainability and domestic revenue exposure are the only proven hedges against tariff-driven volatility. Solutions by experience for beginners, SCHD provides exposure to companies with domestic revenue that benefit from tariff protection. For intermediate, SCHD's energy and financial sector overweights delivered stability during trade war escalation. For advanced, Warren Buffett's strategy proves dividend aristocrats survive policy shocks better than growth speculation. Problem number three, you're missing the greatest recovery opportunity in market history. The S&P 500 staged one of its greatest comebacks ever, rising 30% from April lows to new all-time highs by June 27th. Meanwhile, SCHD offers both crash protection and recovery participation through quality companies that survived Liberation Day and thrived during the rebound. Multi-level approach. For beginners, calculate your panic selling cost. You missed 30% gains if you sold during the crash. Intermediate, understand why dividend stocks lead recoveries when panic subsidies and quality matters. For advanced, build crash and recovery portfolios with proven survivors that compound through all cycles. Here's what blew my mind when I analyzed the institutional flow data during the $6 trillion crash and recovery. Markets lost $6.6 trillion in 2 days but recovered to new highs. The greatest crash to recovery cycle in market history delivered 30% gains for disciplined investors. SCHD maintained dividend payments throughout the chaos. 3.75% yield with quarterly distributions while growth stocks paid zero during volatility. Liberation Day tariffs created 27% import taxes, highest level since 1930s, but domestic-focused SCHD's holdings benefited from trade protection. VIX spiked to 45.3 during the crash. Now back to normal. Fear gauge proved markets overreacted to tariff announcements and policy uncertainty. S&P 500 turned positive for a year on May 13th, just 6 weeks after the crash, proving patience and quality positioning beats panic selling. Major banks raised recession odds to 60%, then cut them. Professional forecasters got the timing wrong, but dividend quality delivered consistent returns. The April 2025 Liberation Day crash and recovery is particularly revealing for smart investors. While retail investors panicked and sold at 20% losses, institutional money knows quality dividend growers deliver returns regardless of tariff policy or presidential tweets. Here's the institutional-grade portfolio that crushed the $6 trillion crash and 30% recovery. 50% SCHD, that's Schwab U.S. dividend equity, the Liberation Day crash survivor with perfect positioning. Crash performance maintained 3.75% dividend yield while markets lost 20% in 32 trading sessions. Recovery benefit, domestic revenue exposure benefited from tariff protection on imported competitors. Quality screen, fundamental strength prevented bankruptcy risk during maximum market fear. 20% VTI, that's Vanguard Total Stock Market, broad exposure capturing the 30% recovery rally. Crash resilience, 4,000 plus companies provided diversification during sector-specific tariff impacts. Recovery participation. Total market exposure captured full 30% rebound from April lows to new highs. Rebalancing opportunity. Dollar cost averaging during crash created massive recovery gains. 15% SCHD, that's Schwab US large cap growth. Quality growth that survived Liberation Day. Crash survival. Profitable companies with actual earnings avoided bankruptcy during maximum volatility. Tariff protection. Technology leaders benefited from domestic advantages during trade war escalation. Recovery leader. Quality growth led to 30% rally from crash lows to new market highs. 10% BRK.B, that's Berkshire Hathaway, Buffett's crash survival playbook in action. Cash position. Massive cash pile provided opportunities during Liberation Day panic selling. Proven track record. 19.8% annual returns through every market crash since 1965. Recovery engine. Value philosophy captured maximum gains during fear to greed rotation. 5% SCHV, that Schwab US large cap value. Deep value plays that bottom during crash. Maximum discount. Value stocks hit deepest discounts during April panic, creating recovery opportunity. Tariff beneficiary. Domestic manufacturing and traditional industries gained competitive advantages. Mean reversion. Classic value bounce delivered outsized returns during recovery phase. Liberation Day implementation strategy. Week 1, lock-in crash survival foundation with SCHD 50%. Get that 3.75% yield protecting capital. Month 1, add broad recovery exposure with BTI 20% and quality growth with SCHG, that's 15%. Month 3, complete crash and recovery positioning with BRK.B 10% and SCHV at 5%. Crash survival risk management. Maximum single position 50% prevents concentration risk during policy-driven volatility. Rebalance. When crashes create 10% plus allocation drifts from targets. Dollar cost average during VIX spikes above 40 to reduce panic timing risk. Focus on dividend income, not capital gains chasing that destroys wealth during crashes. Here's what you need to know about surviving future Liberation Day events. While tariff policies create massive volatility, these 5 holdings have structural advantages. Crash resilience, quality dividend payer, survive policy shocks better than growth speculation. Recovery participation. Diversified exposure captures full rebounds without timing requirements. Domestic protection. Tariff beneficiaries gain competitive advantages during trade wars. Dividend continuity. Income payments continue during crashes when capital gains disappear. Institutional backing. Smart money buys quality during panics, creating recovery fuel. The key insights that separates crash survivors from panic sellers. Stop trying to predict Liberation Day events. Build portfolios that profit from both crashes and recoveries. Here's my bold prediction for the next 12 months. This crash survival portfolio will outperform 90% of panic-driven strategies while delivering 70% lower volatility than any timing-based approach. Why am I so confident? The Liberation Day data doesn't lie. Professional money managers used the $6 trillion crash to accumulate quality positions at discounts. The 30% recovery to new highs proves panic selling destroys wealth, while disciplined positioning creates generational returns. Target performance metrics. 12-month total return, that's 15 to 25% through next crash and recovery cycle. Maximum drawdown, under 12% plus 20% plus for panic-prone portfolios. Dividend income, 3.5% plus weighted yield provides income during capital loss periods. Recovery multiplier. Quality positioning amplifies rebound gains by 2 to 3 times versus broad market. The next Liberation Day crash is your opportunity. While retail investors panic over policy announcements, institutional money builds generational wealth through quality positions that survive crashes and lead recoveries. Your Liberation Day crash survival action plan is: number 1, stop trying to time the crashes. Build quality positions that profit from both fear and greed cycles. Number 2, calculate your panic selling cost. You're probably missing 30% plus recovery gains by timing the market. Number 3, implement the 5-fund crash survival core. Dollar cost average over 60 to 90 days for maximum positioning. And at number 4, set the VIX, the VIX spike buy alerts. Add exposure when fear gauge hits 35 plus for maximum recovery potential. The choice is yours. Keep panicking during Liberation Day events like retail investors, or join institutions building wealth through proven cash and recovery strategies. The bottom line, this $6 trillion crash proved that quality dividend stocks like SCHD survive policy chaos and lead recoveries. While everyone debates the next tariff tweet, smart money builds portfolios that profit from both crashes and rallies. This content is for educational purposes only and not personalized financial advice. Consider consulting with a financial advisor for strategies tailored to your specific situation. Please like, share, and subscribe. Here's to your investing success. Profitable investing.